Good morning, everybody, and this is your S&P 500 day trade setups for today, the 6th of January. We are still stuck in the range. There's no debate about that. We are in a downward trend on the 8th hour based on the moving averages. We are below the 155, so that indicates a downward trend, but it has been rather messy since October, so there's a lot of confusion going on here. So anything can happen. But for me at the moment, there is this level to the downside, which is 37.98. Let's just round that off to 3800. And this level to the upside, which is 38.86. We need to break one of those levels for us to get a direction. So this is now the third week that we have been ranging. So there are a lot of traders that are trading this range at the moment and probably making some good money, but I am not a range trader. So at the moment, if we look at the 3 hour, you can see we're in amongst the moving averages, but we are still predominantly below the 155. So that is the one direction. You can also, as I said yesterday, you can add that in because that's your triangle. We've got European CPI data coming out today. We have non-farm payrolls coming out today. So there's two major catalysts that could drive this in any direction. And just based on what happened yesterday, we had some days that come out, but market behaved kind of weirdly to the data. So I'm not holding my breath for anything right now. So it's range bound, it's sideways. We have a bottom trend line, we've got a top trend line. It is forming a triangle, it's a consolidation triangle. You can look at this on any strategy and you'll see we're coming into a squeeze. So a squeeze normally mean something big is about to happen. So some explosive move is about to happen. Now, logically, that is what we should be looking at, is 38.36 for a continuation down, for as long as we stay below the moving averages. But as you can see yesterday, we were ranging above the moving averages and then basically touched the trend line at the top, didn't even touch it, came close to it, and then we sold off based on the noise that came out. Oscillators heading back up in sort of to the top and also separating, which is always an indication of a bigger move down. I just don't like the structure was formed on this trend line at the moment. So that is not really exciting to me. And if we drop down to the 15 minutes, you can see how long we stayed inside these moving averages. There was no real structure that we bounced off, so there was no real opportunity to the upside. And even these two pin bars here, which is again another weird bit of structure because it wasn't off a level. So you had a pin bar and then you had a confirmation bar below it. Then immediately went up to trigger the stops that were trading at pin bar and then formed another pin bar. And that was pretty much, you can call it almost a tweezer top. And then we sold off based on the noise that was coming out. I'm a little bit skeptical, guys. I mean, I think you can hear that in my voice at the moment. I'm not comfortable of picking a long or picking a short at the moment. So, this here, if I was to get into this 38.36, would be, I'd need to see a proper rejection. I'd need to see a pin bar like this on that level to give me the comfort that it's going to happen. And I'd want a stop of less than 100 points, to be honest. Small position size, and then I'd be looking at this 228 move onto this trend line. So that's kind of the view that I've got today. Any of the noise this morning or this afternoon could drive this market in multiple directions. So I really think we're probably going to be stuck in this range for the rest of the week. And if I just delete the noise here, so we can see what's going on. You can see there's the weekly range, 3 weeks in it. One thing that is clear is there are buyers coming in off the bottom here. And I can probably just fine tune that on the weekly because you can see where the buyers are coming and they're coming off this previous week low here. I did it before, see there, and then it rallied and they're doing it again, but this time we are below the moving average. We're still on the 155 though, and that is an interesting setup. But we do have a crossover here which is pointing to the downside. So 50-50 call, guys, 50-50 call. So for me, I think I'll watch it to see what happens. This is the area for shorts. As far as I'm concerned, it's there and also here. So if we start, we keep rejecting this, there's a good opportunity. But the fact that we're in the moving averages again just worries me all the time. So we will wait for data and see if we do get some catalyst. If there's some catalyst and we start getting a big move, then I will definitely look to jump on that on the first pullback. Hope that helps, and we will catch up with you on Monday morning. Enjoy your weekend.